Hello, ladies and gentlemen. This is the Maestro from the Maestro Way, and I'm here with today's market report. It is Monday, the 25th of September, 2017, 2 days after I was supposed to be 300 feet underwater here in Central Florida. I'm thankful to be with you today. The markets are red, admittedly, but it's nothing to call home about, folks. Down a little over 1/4%. And if you look at the East, very unimpressive, down 1/10%. So it's nothing to get terribly excited about. It has potential to be a change in direction. However, I wouldn't even call this a correction, and it's certainly, as you know, not a crash. The first chart I want to look at is gold. I'm going to work my way backwards. First and foremost, the most recent high back in July of 2016 was at about 1374. We're going to call it 1375. Well, where are we now, Maestro? You're going to notice here that the 50-day moving average, and in particular a 20-day crossover here back in early August, occurred where the price of gold bounced, and it frankly served as strong support. Pardon me. Right here is also the 50-day moving average around current action, last 3 days in particular. If we scroll in here, you're going to notice a couple of other features in this chart. First of all, this is a regression trend tool, and you're going to notice that gold is pushing the top of that regression trend, number one. Number two, if I can scroll in here a little bit more, you're going to see that I employed simply a resistance trend on the top of these candles, and you're going to notice that gold has now moved up through that. So that the rule is when something is traditionally or formerly resistance and then broken, it becomes support, and of course vice versa. So gold is having a really strong, about the past hour in particular. What'll be key is if it can hold this level and close this session at this level or higher, and then go after next the 20-day moving average. There is a gap overhead, and if we go to the 1-hour chart, I think you'll see that gap. It's actually pretty interesting here to see that candle touching the 200 on that average, on the 60. But this gap, which is very rare to see in the gold chart, is up here at closure of that gap will be at 1346. So I would suspect not only would gold be moving up into the 1320 range, but also to close that gap. And then after that, the next levels to watch would be 1356 and of course 1375. Next, we want to look at silver. We want to see if silver is also responding in kind and where the support and resistance levels. First and foremost, I want to identify that there is a golden cross on the chart. It is officially 5 cents away from crossing. That is this red line, which is symbolic of the 200-day moving average, and this blue line, which is symbolic of the 50-day moving average. What is interesting about the 200-day moving average is that it actually is moving upward. This, according to William O'Neill, is the most bullish of crossovers. And this did not even occur back in late 2015, early 2016 back here. You can see that this golden cross, the 200-day moving average, was actually moving downward, which of course then corresponded with about a 40% move in silver's price. So if we get a 40% move from current price, you're looking at a really nice move into the $25 range short term. So that of course would be a nice return on your investment. And but I would suspect the next couple of levels you're going to need to watch. Obviously, right now it's having a difficult time getting beyond the top of this regression trend, and that is formulating some resistance. And also, you'll notice the top of these candles that puts you currently today in the 1740 range as resistance. Then you have another level above that, traditionally 1776, and then once you can break a former high of 1820-ish, then you go after 1860. If 1860 goes, you're looking at 21 range, and of course, if 21 goes, there's no resistance between 21 and 25. Next, we want to look at the dollar. And with the dollar, here's what I've done for you. I wanted to look historically at some of the bearish trends in the dollar. And you're going to notice here at one time, believe it or not, the dollar was around the 120 range, and it moved all the way down to the 71 range. And it made that move basically, in about two different moves here, right? A total of a 41% move down. And you can see the period of time that occurred. 2,261 days. Well, we need to put this current dollar move in perspective. It's about a 12% move down, but only over a period of 280 days. So just, we need to keep this dollar move down in perspective. However, is there any hope that the dollar will potentially move up? Well, it's interesting that I asked that question. If you notice on the way up, the 20-day moving average sort of formed the centrality of this move upward. And you're going to notice now that that same 20-day moving average is sort of the centrality of the downward move. Anytime it moved up above, it then moved back down, moved up, and then back down, up a bit, move back down, again, up a bit, move back down. You can see that that 20-day moving average is an important average to watch. Currently, right now, the dollar is slightly above that 20-day moving average. Now, the other element that you do need to watch is a 20-50 crossover. Right here, for instance, you'll notice that the 20 crossed north through the 50, and then a decent move occurred. You had a move from 95 until about 103. Where are we now? Well, you can see that the 28-day moving average is support currently, and you can see a potentially flattening of the 50-day moving average. Is it possible the dollar gets a rebound here? I do not know, but it is an important element of this chart to watch. Moving on, I want to look at oil. If you're at all familiar with my work, I've been calling for oil to move up, and in fact, it's not moving up necessarily because I suggested it should be moving up, but it is moving up. And I had resistance right here for a period of time, and that resistance is broken. Now, your next resistance you need to be watching is going to be up in this range right here. And believe it or not, that's roughly where, a little bit under where oil is trading currently right now. And you've got three solid green candles in a row as well. It's been a while since oil has formed three. It did form three back here and then fell back down. So also I had oil within a downtrend here with some support, with some resistance. It moved above that resistance, which of course, as I stated earlier, then must become support. And of course, even on my chart, I'm not fully up to date. I must turn some of these also into support. But ultimately right now, oil is pushing into the 52 handle. Next, I want to look at the indices very quickly. I have a rounded top on the Dow. However, we've had rounded tops in the Dow in the past. We have quite a few gaps. The lowest gap currently on this chart in front of you is all the way down at 21.8. 21.8. There, of course, that is the only other gap left in the entire chart. If you look at the Dow from a longer term perspective, you're going to notice that the regression trend, that the Dow actually, believe it or not, is a little out of bounds right here. So in fact, I'll pull that forward a little bit more. It could feasibly handle a pullback, frankly, all the way down even to the 200-day moving average and still remain bullish. You can see that clearly right here. Would that be outside of the regression trend? Of course it would. Of course it would. But we've had bounces where off of the 200-day moving average. So that would be a healthy pullback, folks, if that were to occur. In fact, let's quickly measure that. If you had a downturn, let's say within the next, let's call it 60 days, that'd be about a 20% correction, and still the Dow would remain bullish. Be aware of this. Next, the S&P. And the S&P also, its regression trend, all the way back to 2009, it actually looks like it's a little bit on the toppy side. Not ultimately the toppiest. You can see that it was sort of scraping the ceiling here. So it actually feasibly could move up into the 2,600 range. However, if there were to be a pullback, let's measure this pullback. There are several gaps that could be potential targets, especially for you options folks. But if we did have a pullback down to the 200-day moving average, we had a 16% move. Next, we want to look at the Nasdaq. And the Nasdaq regression trend you can see here. It is above, well above, and well sort of, I don't want to say, I guess I'll say out of bounds. Above its regression trend, although today it did pull back a bit. Again, we want to measure this move. We want to say, okay, what kind of percentage move could occur, and yet the Nasdaq still look bullish. It'd be a 33. That can't be a 33% move. Pardon me. That was a problem. That's a problem. Let's do this live here. Sorry, I thought I had everything prepared here for you. I'm going to start all over. I'm going to bore you to death here. Look for the right tool. Here we go. You'd see a move down about 23% and still remain bullish. If we look at this chart a little closer, the one-day view, you can see that it's well above the regression trend. Now, what is interesting, however, is this. You can see this secondary support line here, and so far the Nasdaq is holding that trend. In fact, I'll get a little bit closer view for you, and you can see this. It is a red candle. It's right here. So we'll continue to watch that. And the Russell, go to the week view of the Russell all the way back to 2009. And its regression trend, you can see there's actually a decent amount of upside potentially left in the Russell. However, again, if we're to measure a potential move downward from here to the 200-day moving average, much like the S&P, would be about a 15 to 16% move down. So there are a few charts. I'm hoping that you found something useful. And if you are interested, I do have a subscription on my website, which is themaestroway.com. And it's going to be free for you. I don't know, I only have maybe 150 to 200 subscribers signed up. At 1,000, it's free to me and it's free to you. And I'll post my charts there first. And also, if you're interested, my YouTube channel is, you can just look up the Maestro Way via the YouTube search feature.
Asset values.
Definitely, yeah, I think you'll find some interesting charts and some interesting uh, commentary from me. I even commented of late about Alejandro Villanueva being a hero to our country and to the quote unquote sport of football. And I even asked the question, uh, are football players, or all athletes, are they children in grown-up bodies, or are they grown-up bodies surrounding children? Just a little bit of commentary from me. On occasion, I am a musician, a music educator, and chartist. But again, thanks folks for being a great audience to Greg for all these years, and I want to thank Greg for allowing me to report on his site. And folks, do what I always do every single day. I hug my children. You should too. Goodbye.